Hey, what's up everyone? It's Mike from Orderflows, and I'm going to shoot this quick video to show you how easy market analysis is now with the new Orderflows Trader 2.0 for NinjaTrader 8. Now, before I begin, a brief disclaimer: this presentation is for educational and informational purposes only, should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. So that said, what I'm going to do is I'm going to show you a few days of a few markets. I'll show you like crude oil, since a lot of people are interested in crude. Show you Eurocurrency, and if I got time, I'll jump into the E-minis. So this is crude oil. Again, this is, you can see this is May 16th right here, the date down in here. And I'm just going to take you through a few days showing you some of the new features of Orderflows Trader that runs on NinjaTrader 8. This is the new version that we're just releasing. If you're on the previous version, I'll be sending out an email with a link that you can download it. So one of the new features is we highlight these areas of point of controls that I think are important based on the order flow. This is my own order flow analysis tool, and what it does, if I think there's resistance, it'll draw on the point of control as magenta color. If I think it's supportive, it'll draw it cyan color, as you'll see. So again, May 16th, this is the middle of the night. Here we got divergence with the ratio afterwards, which is a nice order flow setup I like. You also got the prominent point of control. Market sells off, sells off, sells off. You get down here, you've got divergence, but just divergence by itself. I usually like to see something else coming in. Here you got a sign of trap traders, people getting short in the hole, and you see how the market makes a nice move up. Similar thing up here. Here you have a divergence, and here you have a prominent point of control, so I know there's resistance selling coming in. Here I've got it's also a divergence. Can't see it, it's hidden behind this red arrow. And there's also a sign of trap traders. So, up here at this high area, it's indicating to me that, the market is getting primed for a sell-off. I would love to have a bearish ratio up in here. It's not there, but I've seen other things. I've seen trap traders, I'm seeing prominent point of control, I'm seeing single prints, and you see how the market sells off down in here. Here also you got trap traders down here at the low. Now, one of the features, people always say, hey, what's this red box around the bars? Some of these bars have them, some don't. It tells you if there's multiple imbalances in the bar. That's one of the features of NT8 that we've added. You have a stacked imbalance, which you have here, which is imbalances stacked on top of each other. But if you have the pink box around it, it'll tell you that you have multiple imbalances. Like here you have one, then you got two down here. Here you've got one and then two up here. They're not stacked imbalances in the sense that you have three literally stacked right on top of each other. But you know what? It's just as important to me. But again, take it in context of the market. We've already been making the move down, and you're getting the selling imbalances, which on move down, you should be selling imbalances. What I'd be looking for is, right after swing lows, if there's stacked, multiple imbalances coming in, that's also a bullish sign. But, here was the signal that we got, trap traders down here. Down here you got a prominent point of control, followed up with multiple imbalances. Market turned around though, it just came right down. You got a little short-lived move up. Then in here is nothing really special going on. It's just your normal order flow. Get down in here, you got a prominent point of control. This is right before the API number. Again, here you got some trap traders, but again, you're not gonna probably take a trade in one way or the other. I wouldn't, in front of the API numbers, and as you can see how the market reacted after the API. But you were getting the bullish signals, for what it's worth. Again, I think it takes a strong trader to do that, because you're not trying to predict the API, you're just reading what's happening in the order flow. And when the API comes out one way or the other, market can react quite violently. So you see 930 in here. Let's wait for it to calm down here. You got this prominent point of control here. After about a minute, market sells off to an area. You got a prominent point of control. Market rallies back up. You got some divergences here, but you're seeing, you haven't sold off yet, right? Most people think that, hey, I got a divergence, I got to get short. Well, you should really be looking for some signs in the order flow. Here you've got prominent point of control, coming in here. So I know there's resistance selling. Market starts to come off. I mean, you do have a bullish ratio here, but nothing in, no other form of support like in the bar. Market keeps going down, just sort of confirming that move down. You've got, you got bearish ratio, you got multiple imbalances, more multiple imbalances, as which is what you would be expecting to see when the market's selling off. Here you got a supportive buying coming in, kind of short-lived. came right down, hit a new low, then more supportive buying coming in as you took out this swing low here. Market got the bounce up, you got the confirming signal here with the sweep, with the zero print. Then you get up here, you got trap traders at the swing high. Market reacts, it sells off to an area where you got some supportive buying in the point of controls. Prominent point of control here just sort of goes sideways, making a little new higher, a higher high here. Prominent point of control doesn't really work out, just sort of goes sideways, pop up through there, start coming off here. You got a prominent point of control, but it's met immediately with the what do you call it, the zero print indicator here. Some trap traders on the way down, multiple imbalances. So you know, just because if you were to buy this bar here because of the supportive buying, you still got to read what's happening in the order flow immediately afterwards, right? You've got the zero print, you got multiple imbalances, you got all negative delta. So even if you're still long, you should be out and short. Market sells off, you get down here, got a bullish ratio, rallies up to a bearish ratio, kind of goes sideways. Times it's 12 o'clock here. Got a bullish point of control here, just sort of goes sideways, a little bit, starts working its way up. Here you've got the sweep, the zero prints coming in. Now you're running about 1:30 in the afternoon. Things are sort of quieting down. You've got two bearish ratios followed by two bullish ratios. Same with the point of controls. Market does shoot up. Then you're in the evening session here already. This is just after 7 o'clock. You've got trap traders, you've got a prominent point of control. Market sells off a little bit, doesn't take out the previous point of control at this point. So what is that? 71.91 bouts. We sort of come up right around to that same area. Again, prominent point of control. So I know at that area around the 71.91, 92 area, I've got selling. Here I got some trap traders as well up there. Market sells off from the 90 area down into the 70s. Starts turning around, coming back up, finally takes it out. As we take out that prominent point of control, you see the aggressive buying coming in the imbalances, which is always a good sign. We had some data come out there in Europe. Then we run it in here. We got a trap trader. Market sells off a little bit. Here you got divergence with the prominent point of control. It doesn't really sell off. Then you get up here to this new high. You've got single print. You got a bearish ratio. You got a very strong prominent point of control. So you got several things going for you. Okay, so even though you lost on this trade right here, if you just were to trade the naked prominent point of control by itself, again, I don't always advocate that. Look for some more signs in the order flow, and you get this nice move down from the 72.30 area down to the 7200s. Starts working its way back up. Here you've got a prominent point of control right on the top. You got the bearish ratio, and boom, look what happens again from the 72.25 area back down to below 7200. And another prominent point of control just goes sideways that time. Here you got some very strong trap traders, followed up by multiple selling imbalances. Now people will say, well, you got multiple buying imbalances here. Shouldn't the market go higher? Well, yeah, it can, but it did. At the same time, you also have to read what's happening in the order flow. I mean, just because you got multiple imbalances here, when you get to this bar, what do you got? You got very strong trap traders in here. Then you got multiple selling imbalances. So you shouldn't be thinking, well, I have the stack buying imbalance, I should still be long. No, you should think about getting out once you see this bar and when you see that bar as well. Come down in here, some supportive buying in the point of controls. Here you got a ratio. You've got the prominent point of control. Sell off, go sideways. I got some selling pressure coming in here. Market's just going sideways. Finally pops back up. Get to the swing high, prominent point of control, bearish ratio immediately afterwards. Start working your way down. Here you got divergence with no ratio. It's just a divergence. Yeah, personally, I'd prefer to get something else than just a naked divergence like that. Market rallies up. Here you've got multiple imbalances, but I'd like to see multiple imbalances closer to a low rather than after the end of a move. You get up here. You also got some trap traders down in here. People, trap traders, at this point, I'm looking at supportive buying. Then we get up here, we got trap traders. Here also, trap traders as well. It's a sweep. And then, boom, the market goes down. So again, don't get fixated on this. You have to keep reading what's happening in the market. When conditions change, it can change immediately in the next bar, in the next 10 seconds, the next 30 seconds. You got to be able to react and read it. Don't just think, well, what, I've got to be long because of this bar right here. No, when the next bar comes in as bearish and the bar afterwards comes in as bearish, think about getting short. Okay, you got a couple of divergences here. Again, just naked divergences. The market pops up to that naked point of control, comes down in here. You got trap traders. You got a prominent point of control here. Market makes a nice move higher. It's going higher, runs into this prominent point of control, but then you got bullish ratio. You've got a potential sweep here, and market keeps moving up. Here you got trap traders. Here you've got trap traders. Then you're running into the close. This is the reopen at 5 o'clock. This is like, what day is this? This is going into Friday morning already. This is that silly time during Asia, during the reopen, where it's just sort of quiet. Then we come in here, we got a divergence with prominent point of control. Nothing happens. Makes its new high here. Got positive delta though. But again, you got a prominent point of control. Look how this market trades right back up to that prominent point of control. It holds, and then you got another prominent point of control. What happens? Boom, it's lights out. Market sells off from the 71, 75 area down into below 71.50. Keeps going lower. Here you got divergence. Nothing telling you to buy that by itself. That's just a naked divergence. And even here, you got a potential, more selling pressure coming in with that red arrow telling you there's some strong sellers basically wiping out the bids. Get this divergence, no ratio, no prominent point of control, nothing, just a regular divergence. Again, I'm not a big fan of just buying divergences by themselves. I like to pair them up with imbalances, with prominent point of controls, with ratios. You start getting the ratio in here. It's a little bit far removed, but you got the multiple imbalances. We rally up here, we got a ratio, and the prominent point of control, and we sell off quite nicely. Now we're at 9 in the morning on, I believe it's Friday here. Prominent point of control, it just sort of goes sideways. It bounces from there to there. Then you get here, assigned to trap traders. You got the arrow indicating a potential move lower. It runs into this area here with the supportive buying, but then again, it comes right back with the bearish ratio, and you make the new low. Here you have your divergence with the ratio and a prominent point of control. Excuse me. So, these are the types of trades that I like to get, not just the divergence by itself, like you had back here, divergence, because the market can still keep going lower. I like to pair it up with, other signs in the order flow, and I'm getting it. I've got my bullish ratio bounds low, indicating supportive buying, and I've got the prominent point of control as well, which is nice. And again, you rally up from 71.34, you come up here to 71.50, where you got the bearish ratio again, and you just sort of bounce around sideways in here. So that's a nice little move to get. Then you come up here, you got a prominent point of control, runs into this next prominent point of control on the buy side, and then you run back up in here. You get the trap traders just on the other side of that prominent point of control. And what happens? Boom, sells off quite nicely. You get this one prominent point of control here. Then you get obviously the big seller coming in, but again, you got the sign of some trap traders in here. Market doesn't really muster much of a move up. You got multiple imbalances in this bar. You've got the bearish ratio. So even if you were long here, this is a sign to be getting out of that market. You run into some more trap traders down here. Again, market's moving pretty fast at this point. It's kind of a fast market condition. Bearish ratio comes down in here, starts working its way back up. Honestly, this area in here, but that 11:07 timing, again, 11:07 is here to here. It was moving pretty fast. I believe it was something that came out at that time. Market starts moving back up. Prominent point of control, that doesn't work. Then you get some trap traders here. You have them here. And then these guys that were long and wrong, started covering their shorts. This happens to a lot of people. They think, well, I'm buying it here for the breakout, and they buy it here. Then they start taking some heat, and they capitulate, get out, and all of a sudden now they found themselves long and wrong, and now they're short in the hole. Maybe they reversed, and it's indicating that in the order flow. And you can see how the market makes this nice move up in here. You get this new prominent point of control right up in here. Bearish ratio. Market sells off a little bit. In here you have a bullish ratio, but again, it's just on this little dip here. I'm not convinced that it's the start of a big move. Again, I'm looking at a lot of bearish signs here, and it's coming in after just a big move up. Another prominent point of control, but then here, look, a single print, bearish ratio. More single prints as you're sort of going into the close of the week. So that was crude oil. That was crude oil for the last few days of last week. Let's take a look at Eurocurrency really quick. I don't want to make this video too long. I prefer to keep it a bit shorter here. This is why I like NinjaTrader 8, because you can see how fast it refreshes. So again, I'll just go back What day is this? I don't know yet. Look at the calendar here. So May 16th. Let's just start from May 16th, because that's all this time here is just the from the reopen. But May 16th, which was Wednesday. Where are we here? Here's May 16th. So again, prominent point of control comes off a little bit to some trap traders here. Market shoots up a little bit, starts coming off. Again, you got the multiple imbalances here with the little bit of a sweep. Again, it's happening just before the European Open, so markets are kind of thin. Got a nice prominent point of control here for resistance selling, and just by looking at that volume, again, it's coming in right under the previous resistance selling as well. Market makes a nice little move down. Some trap traders again as you sort of come back up in there. What I'd be looking for now is either the move lower at this time at 216, and if it's not coming, I'd be looking for signs in the order flow that maybe it's if I can't get that sell off, what's going to happen? Two things: it's either going to go sideways or it's going to start rallying. In this case, I see a sign in here with the sweep in the market coming through at multiple imbalances, and we start moving higher. Here we got a divergence. Here we got a prominent point of control. Market starts working its way down. It's doing it reluctantly, grudgingly, working its way down. But again, there's still no reason to be, if you're short, there's still no reason to be getting out. There's no reason to be buying in here. Even the deltas are kind of small, 1, 7, 1. And then boom, you get a sweep in here. You get a trap traders in here. You got multiple imbalances. We sell off. You got a bullish ratio. You got the prominent point of control. Puts a half-hearted rally up in here. Stack selling imbalance here. You got a trap traders, but then you get a new prominent point of control down here at the swing low. Start rallying. Again, another prominent point of control, but it doesn't happen. The move doesn't happen. Here we get a sweep coming in the market here in the order flow, followed by a bearish prominent point of control. So you got a couple bearish things happening in here. So even if you're long from this area, say you're long from here on this bar or this bar, by the time you get out here, conditions have changed. Sometimes people like to get married to a position and they're afraid to cut it. But you know what? You got to be reading what's happening in the market, and here it's very bearish signs in the order flow, and then the market puts a nice move down. That's the move you're looking for. Here you got a divergence with a prominent point of control. Again, it's sort of a half-hearted rally. You got some confirming signs and trap traders there, but that was it. It didn't happen. Then you got the bearish ratios coming in. You don't have the prominent point of controls, but again, bearish ratios should be a sign to you that, hey, maybe this move higher is not happening. Here is resistance selling. Here is price rejection. You even got the single print. Market sells off. You get down here to a prominent point of control, bullish one, followed up with the ratio that you like and multiple imbalances. Again, next bar up, then it turns around, it starts coming back down. Single print there. Then you start coming in here, getting into about 6:30 in the morning. Multiple imbalances and a prominent point of control, followed up with a potential sweep in the market. And what happens is the market makes this move down. Here you do have trap traders, but it's followed up again with multiple selling imbalances with another sweep in that market. So if you're short here and you cover it because of this bar, by the time this bar is done, again, you should be short again, because that's what trading is about, is getting in and out based on what you're reading in the market. But everyone talks about you got to cut your losses short, let your winners run. This is how you cut your losses short, by reading what's happening in the market and reacting to it. So if you're short from here, okay, you covered, maybe you got whatever, a few ticks out of it. Now you're long. But then when this bar comes in and you read what's happening in the order flow with the sweep, with the multiple imbalances, you should not be long anymore, and you should be getting short. And you could catch this move back down from the 1808 below down to down here where you got a prominent point of control indicating support. So that's from 1808 to 117.98. That's 20 ticks in the Eurocurrency. Again, if you got long here, that's great. You would have caught the move back up. I'm not saying you have to constantly be doing that. Honestly, after you get your little win here, a little loss there, then the nice move, I know a lot of traders will just take a break, go have a smoke break or something. But again, it's giving you a signal, potential buy down here. We rally up. Nothing major in the order flow telling you really there to get short. You got the ratio in the single print. Then here you got a prominent point of control. Then you start coming down, prominent point of control for the sell. You start coming down, you got a sweep, potential sweep there. You get down here, you got a ratio and divergence. not stack buying balance, rather multiple buying imbalances. Again, that's why I say, sometimes the market, I think, just really tells you stuff. I mean, for me, this is like the the quarterback hands you the ball and you run to the end zone. You got to get long. Then you come down in here, you got signs of price rejection, right? So you say you're not convinced in here by this bar, you should be convinced. And you get the nice move up. You got signs of trap traders down here. Here you got sweeps. Here you got supportive buying coming in. Those are the trades that you look for on a daily basis that happen quite frequently. You rally all the way up in here. You got confirming multiple imbalances. You get up here. You've got your first bearish ratio. So you got your potentially first sign for getting out of the position. You got single print. So imagine, if you were to buy this low where you have the divergence, you have the prominent point of control, you have the multiple imbalances, you're getting along 117, call it 117.96 right in here, or even here, 117.98, all the way up to where your first sign that this move is potentially over is up here at 118.34, 118.32. Say you get out 118.30, you're talking 70 ticks there in the Eurocurrency. You got to sign the trap traders here with prominent point of control. Doesn't work out. Market sells off a little bit. Then again, you got the prominent point of control here. You got multiple. Well, in this case, you got stacked and balanced. It'll draw the box whether it's stacked or if it's separated like this one. But again, that's what you're looking for. You're looking for signs in the order flow, not just one thing, but if you get 2 or 3, that's even better. Then the market is just sort of hanging around here, going sideways. You get another prominent point of control right before that big move up. Confirming the move is you got the multiple imbalances. You get up here, look what you got. You've got trap traders. You got multiple imbalances at the high here, at the swing high, followed up with more sweeping activity, and the market moves down. I mean, you do have a prominent point of control there, but again, if maybe you broke even on this trade. Okay, nothing major in here. Here's a prominent point of control. But then again, it comes in here. You got trap traders coming in, appearing here. Market starts selling off. Here's prominent point of control. Nothing really happens. You got a trap trader here. Now this is interesting. You got a couple bullish ratios down here. Sort of at the swing low. But again, nothing's really happening here. Here you got a sign of potential trap traders coming in, and the market starts rallying. This area, honestly, I felt was a little bit tricky because you sort of got to wade in and out of conflicting signals. But again, you don't have to catch every single move. You'd like to catch them all. Now this one here I thought was interesting because here you have a trap traders. Here let me make this up a little bigger, and then you got multiple imbalances after a big move up. Okay, and you get short. I would get short there 10 out of 10 times. And then it starts coming back here. I've got multiple imbalances, a prominent point of control. Okay, so if I'm short at this point, I'm looking, if this trade's not working out because I don't like to see this bearish activity coming in or bullish activity coming in here. I expect the market to start selling off, and it's not. Instead, you got buyers coming in. You got the red bar. Okay, I'm not fazed by that. But then you got a sweep coming in here and multiple imbalances. And, the market makes another short-lived move up, and it just sort of goes sideways to higher. Again, no major reason to sell. Even if I got short here, it's followed up with some nice bullish signals coming through in there. And this one here, this was nice. This is around 1:30 in the afternoon, 1 o'clock rather. Prominent point of control followed up with a bearish ratio. The single print as well. You make this nice move down into this area where you got some trap traders down here, and then you're just going into that close already. This is 4 o'clock, 5 o'clock. 4 o'clock close and 5 o'clock reopen coming in here. So I'm not too convinced on this stuff. I would have liked to get a bigger move faster. Sometimes those moves from after 2 p.m. to 4 p.m. are quite slow. But again, you would have been slightly rewarded for your patience. This is the Asian session. Again, you're seeing the same things. Here you got a couple divergences. Here you got a sweep, multiple imbalances. You got the prominent point of control with the divergence. And again, look how this market keeps going up. I mean, these are the tools. This is my sort of thought process that I've put into all the tools of the Orderflows Trader to help you sort of go through the same thought process. I mean, honestly, I used to run a trading room for how many years? And I would just, sit there and talk about what I'm seeing in the order flow. And honestly, I felt like it was a bit redundant at times because I would be talking about the same things over and over and over. I thought there's got to be a way to put it into the software And that's what I've done. I've done it to highlight these areas to you so that you can, sort of see it yourself and make the decision. Because if you're just looking at a normal volume footprint chart without these tools, you're not going to know what you're looking at, right? You're just going to be looking, okay, there's numbers here, there's some buying imbalances. Okay, what do I do? Here it's telling you there's trap traders up here at the swing high. You come down in here, some supportive buying, some resistance selling. Honestly, this was one of the ways I traded. I would look for supportive buying, sell it up here where there's resistance selling, get short again, and just do that back and forth all day long. When I was scalping, I'd be buying it based off this. Taking however many ticks out of the market at a time. Okay, so here you're coming into the European Open. It's kind of quiet. You got this last prominent point of control. This one doesn't really work out. You're staring at a lot of bearish signals in between. Now you sort of got this clear path. You're not looking at bearish signals that you were looking at just prior to them. Market makes a nice move up. Multiple stacked imbalances in here, rather. Again, a sweep coming into that market, and look, I mean, it makes this nice move from the 40s all the way up to 60. And then again, this is stuff that I think is, if people don't know what to look for, that's why I like to highlight it, because people don't know what to look for. So here you got the multiple selling imbalances. Here you got signs of a sweep, okay? And you see how the market reacts to that. That's why I created this software, is to make the order flow analysis easier for people, because I could sit there and tell people, okay, look for this, look for that, look for that on the order flow. And some people can do it, some people can't. If there was a way to make it more visual for you, I think that's going to make it a lot easier. So that's why we have these arrows, that's why we have these boxes, so you can see this stuff happening. Here so it sells off again from the 52 area down to the 30s. You got some trap traders here with this arrow, followed up by a bearish sign, some more trap traders, but it's coming in a move already that you've already been participating in. Prominent point of control followed by another prominent point of control. You get down here, you got a divergence, no ratio. I'd love to have a ratio or prominent point of control. They'll really give me a sign to catch that move. Honestly, I probably wouldn't have taken it. This is the delta surge happening right in here, actually, if you're familiar with that indicator on my website that reads the delta. But that's the delta surge, I can tell you that right now. Then you come up in here, you got a bearish ratio. Again, that's followed by a multiple imbalances. So, you just had to move up. You're starting to see some bearish sign. You see the aggressive selling coming in. Market sells off. Right? You got a prominent point of control here. Market starts to rally, fails. Then you got another divergence. Again, this one I probably wouldn't take either. I probably wouldn't have caught that move. That was a nice move to catch. It's followed multiple imbalances here on the way up. Again, you get down up here, you got a prominent point of control. There's only 2 in the morning. There's a lot of activity going on already during the year. Some multiple imbalances here, then met with a bearish sign with the prominent point of control, bearish sign there. Market sells off. You got a sweep right here. You see how the market reacts, and you get this nice prominent point of control here. Single print. Market works its way back down. You've got bullish prominent point of control, bullish one here. Multiple point of controls. Multiple buying imbalances. You got the bullish ratio. You got trap traders. Market makes a little bit of a move higher. I mean, it doesn't look like much, but it's actually from 118.28 all the way up to, what is that, 118.32, which is a decent move in the Eurocurrency. Actually, it's up to 36, but you probably would have been looking to cover it around 32. And then here you got a sweep. You got multiple imbalances. Again, more imbalances in here. Bearish ratio, single print. Market sells off again nicely. Again, that's what. If you're just looking for stacked imbalances, you're going to miss this, right? You'll see this is a stacked imbalance, but you're not going to see the multiple imbalance back here. And it's coupled with a market sweep as well. So it's quite powerful stuff. Prominent point of control, market rallies. Another prominent point of control, market makes a little half-assed rally, sells off a little bit here with this bearish point of control. Multiple imbalances. You're sort of at this base area, right? You sort of rallied, sold off, going sideways. Boom. You're seeing multiple aggressive traders coming in here on spread out buying imbalances. Market makes a nice move higher. You get up here, some trap traders at the swing high. Sells off a little bit, sells off to a prominent point of control, rallies back up. Nothing in here really. Got a couple selling imbalances, market, and a sweep. Market doesn't really sell off. I mean, this bar sells off a little bit, but just sort of covers back. Then you run back in here. You get this prominent point of control. It lines up sort of with where you had the stacked imbalances, multiple imbalances rather. Sells off. Again, you got some trap traders and a sweep coming in there. Here you got here you got stacked imbalance, but then again you got prominent point of control, bearish one, followed by a bullish one, followed by buying imbalances. Multiple buying imbalances, followed by a sweep happening in the market. The market continues rallying. Here you got a prominent point of control. Market just goes sideways though. Then you get down here, prominent point of control, and a nice bullish ratio, followed up with a sign of trap traders. This is the bar you should have got long on, not this one. You know, with this is a nice buying signal right there. Doesn't make that massive move, but look where it comes back down to. It comes back down to this previous point of control, where you also have the ratio. So you know you got supportive buying in here, comes right down in there. Again, it starts making that move back up. You know, you're seeing bullish ratio. You're seeing you know, sweeping activity in here, multiple buying imbalances in here. Finally makes that move up, starts coming down. What do you got? So you got the swing high, you got some selling imbalances in there. Prominent point of control with stacked imbalances. Market moves a little bit higher. And some trap traders in here, which follows this bar with a bearish ratio and multiple imbalances. Again, you know, it comes down to what your time frame is. You know, some people will be happy to get 5-6 ticks out of Eurocurrency per trade. Some want to get 10-20 ticks. You know, there's different ways to approach the market. So you start coming up in here. You got some signs of trap traders in here. Obviously, you see the market sell off quite nicely off that. You got the bearish point of control in here, so we sell off. Bounce up a little bit. There's still selling pressure. Okay, and market continues down here. Again, this is what I'm talking about. You know, I just showed you before. This is now in the evening time. You've got a divergence. You got a bullish ratio. You got a prominent point of control. You got multiple imbalances. You know, I mean, market is screaming at you, hey, Mike, buy me. You know, what happens is the market rallies. You know, it goes from 118.17 all the way up to 118.30s. You get another divergence here, another prominent point of control. This time it's a sell, and it's multiple imbalances. So you know what, if you were long from here, you could have taken a nice ride up to, you know, 118.17 all the way up to 118, you know, 29, 28, and this bar is probably where you'd be getting out, looking to get short. Just sort of hangs around here. Prominent point of control sort of line up. It doesn't really sell off. You know, you're sort of going into that midnight time where it's kind of quiet till the European Open. Starts rallying here. This is a trade I would have gotten short on. Didn't work out. Follows by, you know, you got your bearish ratio, price rejection, you got your single print, you got your prominent point of control. Comes right back with buying imbalances. Then you get up here, another prominent point of control, bearish ratio, you know, single print. So you got a few things, you know, different things in the order flow happening. It's all bearish signs. There's no really bullish sign here. You got trap traders here. You got trap traders. But again, it's just, you know, sometimes, you know, the market just doesn't cooperate and it just goes sideways on you. You're looking at a few bullish or bearish signs here, followed by a few bullish signs. You get down here, sort of the last man standing is this last bullish sign. You know, you got the bullish sign here with the trap traders. Here you see single print, single print, single print. Boom. You know, so it's telling you that every time you start coming down, you know, it's fewer sellers. You know, sellers aren't really interested. They're sort of dwindling in that sense. Market rallies up. You get a bearish ratio with a single print and just sort of go sideways. What time is this? 3 in the morning right now. You can see here, nothing major. Again, you know, sometimes the order flow is a little bit confusing in the sense that you get a bullish ratio followed by, you know, a bullish sign followed by a bearish sign. Again, bullish sign followed by a bearish sign. But again, you know, if you can line them up with a few things, it's always good. It's always better that way. Here you're seeing a potential sweep, and then you're seeing, you know, potential trap traders finally coming in. Now you're getting the move. You know, here, you know, if you're getting short, it didn't happen. You're getting stopped out. Okay, save your bullets, right? Take your loss. Look for your next potential trade. You know, here you have prominent point of control. It's sandwiched in between these two bars, which are very bearish. What are you going to take? Okay, so you're not convinced by this bar with this multiple imbalances in here. You should be convinced that the market's coming down. You know, if you're getting short here, 118.26, look at that. You catch a nice move down. You know, maybe you covered a little bit here, you know, 118.20, but then it comes right back, you know, with the bearish ratio, and then it starts selling off quite nicely. got down here to this low here, you got some trap traders coming in here. You can see them, people that, you know, sort of missed this move, thinking, hey, I gotta sell it, start rallying up. Oh, it's a great opportunity for me to get short again, and they don't. They're stuck. They're short in the hole. Market rallies back up to this prominent point of control here, sells off a little bit to this next point of control. Then you got this bar here, high, you know, sort of like this little mini double top, but you got multiple imbalances appearing in here. You got a single print. Market just sort of goes sideways, unfortunately. It goes lower, but, you know, to me, I would consider that sideways. Okay, my kids tell me it's time to eat. Actually, this video is going a bit longer than I imagined, but anyway, I'll just finish it up here. I think this is the last day in the Eurocurrency. So you got a divergence here, just a naked divergence, but a divergence with the prominent point of control right there, followed by, you know, some potential traders trying to get short in the hole. Market rallies. You know, that's what you're looking for. You know, you're looking for these signs in the order flow, especially when several things confirm, you know, market direction. You know, here you've got trap traders. Here you got a prominent point of control, followed by, you know, multiple imbalances, followed by more multiple imbalances. And where's the market do? It sells off quite nicely. Comes down to where? Area where you have supportive buying coming in. Area where you got resistant selling coming in. More stacked selling, more selling imbalances. Again, you got a ratio and divergence. This one failed. Well, look what it comes right back with. It comes right back with multiple imbalances. So even if you're getting long off this, I would get long off this. But if I'm looking in the next bar and I got a very bearish sign, I'd be getting out. No reason to hold that. And here you get down here, prominent point of control. You've got trap traders again. It makes sort of a half-lived move. And then it sort of goes sideways doing this. Makes a new low by a few ticks. But again, you got that prominent point of control coming in here. You see the cyan color. Rallies back up. Boom. You get another bearish sign in here with the point of control. Market sells off. I mean, this is why, you know, this is what I'm going through in my thought process. You could see, that's why, you know, I'm a visual person, right? I love Instagram and stuff like that because you see the pictures of everything. You can see how it rallies from this point of control to that point of control to this point of control, back up to this. And you know this as it's happening. It colors it in when I think it's important. You know, I've written it out so, you know, it can be coded so it'll show up right as it's happening on these areas that are important. So imagine you're buying it here, holding it to there, you get short here, then you got a buy signal here, you get long here, you're getting out here. You know, it's like, you know, here to there to there. You know, that's what you like. Again, another one, you're getting short here. You know, this one is nice. You got a ratio, you got the prominent point of control, you got multiple imbalances, and you make a nice move up. You know, anytime you could add, you know, a few of these together, confluence, I think is the word that traders like to use. It just makes trading a lot easier. You know, here you got trap traders. You know, here you got trap traders with the multiple imbalances. It fails. Honestly, it fails. But you come down here to supportive buying. Okay. And then again, you got similar opposite of this previous one. You got the trap traders. You got the bearish ratio here. You don't have a ratio. And you got multiple imbalance. It just runs into this supportive buying that you saw earlier. Finally, it sort of broke down, made that little new low, and it's just going sideways. You know, what can you do? You know, there's supportive buying in there. Anytime you're going to get short going into an area of support, you know, you got a lot to get through. And even if you get through, it doesn't necessarily mean it's going to keep going down. Then here you get some trap traders down in, you know, in this move. You can see it in the middle there, 112, 48, 71, 3, 1, and boom, the market starts moving back up, and you go into, well, that's it. That's all the data that I had for that week. But anyway, this video went on a bit longer. I do want to, I want to try and create another one later with, I'll try and show minis, you know, 'cause a lot of people are interested in minis. This one was on Eurocurrency and crude oil, but again, so, you know, this is the new version of Orderflows Trader, and I think it can help a lot of people make their order flow trading a lot easier. Okay, so if you're interested in the software, again, you go to my website, orderflows.com, and be sure to subscribe to my YouTube channel, because anytime I post videos up there, at least you'll be alerted to it if you're a subscriber to my channel. So thank you, and have a great day. Bye-bye.